Hey traders, Raghee here, and we're going to talk about building a long bias for day trading step by step here. Many of you might have heard the way in which we've been trading this market since mid-month. In fact, specifically June 10th, we made the shift to a long-only bias. But I want to give you some detail as to how we got here and how to understand the process. So we are in an asset bubble. You're seeing high beta, high Momo stocks taking the lead. You're seeing tech taking the lead, discretionary, etc. And a lot of you know we've seen a transition, probably at breakneck speeds. We're all suffering maybe with the aftermath of whiplash as we've gone from, oh my gosh, this is 2008 to hot damn, this is 1999, right? So with that in mind, we have what's known as a double green uptrend on the NQ. What does that mean? This is a study that I make available to members. And here's how to do it. It's really simple. This is just sort of simplifying the process. Is the 8 above the 13? Is the 13 above the 21? Is the 21 above the 34 EMA on the close? When we have that kind of structure, we have a double green market. And that's really what these two flags, trade flags, tell us. Now, again, once we know the markets are behaving like a bubble, it just makes sense to acknowledge that there are going to be certain times that I've had, basically, let's see, 4 times distinctly that I can think of when I've shifted to this mode of I will leave the shorts by the wayside and I will focus solely on the buys. Even if it looks like in my classic setups that it looks like I want to short, I will still say thanks but no thanks, because in an asset bubble, the shorts are going to experience maximum pain. Let me show you what I mean. In the case today, we had the NASDAQ, which because of the strength in the XLC communications and XLY, which I got long in along with the NQ, we saw a breach to the upside. We know certain stocks are going to be participating, like Apple. We know certain sectors and ETFs that mimic those sectors are going to be participating, like the tech, the discretionary, and the communication sector. We also know that tech is the #1 weighted sector in the S&P. It's the #1 weighted sector, by the way, in the Dow as well. So almost everything has sort of a NASiness about it, a NASDAQ type quality influenced by tech about it. Now, everything I'm talking to you about is a timeline from the open to approximately noon. I look at the day as really 2, maybe 3 days if you want to look at it this way. The open to the midday doldrums, approximately 11:30. The midday doldrums from 11:30 to about 1:30, and then the end of the day, the second half of the day, 1:30 to 4 p.m. Eastern. So most of my day trading, and when I say most, 90+%, typically is going to be done taking advantage of the morning to the midday doldrums, to the beginning of the midday doldrums, which I also call the Bermuda Triangle for sort of obvious reasons. So good trades go missing in the Bermuda Triangle sometimes. So what we have is a pullback buy where I bought some QQQ calls. You can also look at NQ futures calls. And we looked to the long side. Well, that was easy. The long trade triggered, the clearing range breached to the upside. But what about the S&P? The S&P breached this morning to the downside, and a lot of folks, I think, got bamboozled into putting on a short down near the lows of the day, down near the clearing. In a long bias market, like I'm treating this one, this actually became 2 things. 1, I cannot short the S&P because the NASDAQ is breached higher, and 2, in a long-only bias, I will look back on the standard deviations of the volume-weighted average price to say, look, we're really close and at this -1.8 to -2.0 standard deviation support zone from which I want to be an S&P buyer. If nothing else, it's long or nothing, okay? And with the NASDAQ heading higher, to me, the NASDAQ is the dog walker, the S&P is the dog. And this is the way in which we're operating going forward. This is the way we manage today, with particular emphasis on the NASDAQ, the XLC, the XLY, and the S&P to the long side. Pretty much putting on the back burner the Russell and the Dow. Looking at long side and the relative outperformance in tech and what is going to track most with that NASDAQ breakout. Hope this helps, and I'll see you in the next update.